So there's basically a three-part cycle here. We're in the first part of that cycle. Gold remains unbelievably strong. The second cycle should hit in the next couple months where we see it reattack the all-time highs. And then the third cycle is where, in my opinion, you're probably headed over the next 12 months to, potentially $2,500 to even $3,000 an ounce on gold.
It's that time of the month again where we take a look at the charts, and we're going to specifically look at what's going on with gold and silver. And I'm joined once again by Gareth Soloway of verifiedinvestor.com. Gareth, welcome back to the channel.
Hey, thank you so much, Dave. Great to be back and great to talk charts.
It's always great having you on, and I really appreciate the insights and just the different way of looking at charts and at markets that you bring to the table. Maybe we could start by having a look at gold. We have seen a downward move over the last couple of months. We've still got that kind of wedge formation building. What's your expectation on gold now over the medium to long term?
So for me, one of the things I always look at is how is the dollar behaving when I'm looking at the price action in gold. And what we know about the dollar, if we flip up the Dixie here, is that the dollar's been very, very, very strong since basically mid-July. And in all fairness, the gold has held up remarkably well, right? I mean, we're basically just having this bullish consolidation price action, even with this major surge in the dollar. So for me, that puts me in a very good position where I'm a big fan of gold right now. I think, again, you're looking at a bigger time frame where you have the move up from 2018 to 2020, and you've just been basically going sideways for a significant amount of time. And that's, again, digestion of the big move up from here. And ultimately, it should yield a breakout. And I think it's important for people to understand that the markets are going through cycles right now. So right now, you have bad news is good news, or essentially good news is bad news. Good news is bad news is the way the markets are behaving, where you have good news creating a scenario where the dollar goes up because the Fed may continue to hike. The next phase will be bad news is good, where the dollar will start to drop, and that'll be good for gold. So you'll start to get that move up to double top, triple top, maybe a breakout of all-time highs. And the last phase will be bad news is bad news, where the dollar continues to fall, but the stock market falls as well significantly, which means there's not many alternatives for protecting capital, and you'll see money really rush into gold. So there's basically a three-part cycle here. We're in the first part of that cycle. Gold remains unbelievably strong. The second cycle should hit in the next couple months where we see it reattack the all-time highs. And then the third cycle is where, in my opinion, you're probably headed over the next 12 months to, potentially $2,500 to even $3,000 an ounce on gold.
Okay. I like that. Let me just get that straight again. So currently we're in a bad
good
news
is bad
good
news.
News is bad news, and then we move into the bad news
is good news.
And then we move into the bad news is bad news. I like that. I like that. I haven't heard it put that way before. It's quite interesting. And then you think that we're heading back up to once we get into the bad news is bad news scenario, we're going to break through that all-time high level, which is about the 2080 level, isn't that right? And then and beyond, and that's going to be the impetus to move it above that line, you think?
That's right. And I think it's important to recognize that, you look at central banks all around the globe, and they're all buying gold, by the boatload. So again, I always say they're the ones printing money, and they're the ones that can print more money. And if they're buying gold, that probably signals that we should as well.
Yeah, absolutely. And then just looking at what's happened in the stock markets, there has been this kind of quasi risk on for the last year anyway. And what you're saying is, despite the fact that there is that risk on appetite, despite the fact that we have seen that additional strength in the dollar, as you can see it to the Dixie, to the dollar index, you're not seeing the type of gold correction that you would have in other years. Would that be fair to say?
Yes, absolutely. So the dollar's gotten stronger. The markets have been risk on, which is usually a negative for gold. And then interest rates, we know they've gone up substantially, and usually that's a negative for gold. So again, you can see here's the S&P chart. We're not that far away from our all-time highs. And for gold to have maintained its level here, really only about, less than 10% away from its all-time highs, that's remarkable price action. And again, shows me accumulation by smart money, big money, like we said, central banks as well. And that tells me something about what they see coming. So again, it's not that I'm not the smartest person in the room by any stretch. but I look towards these type of things to give me a heads up, and it does coincide with what my views are.
So it really shows you that smart money is buying at this moment in time in the gold
Right.
markets. You've pulled up a chart there of the S&P, so maybe we'll just have a look at that and give us your feeling of what this is showing us.
Yeah, so here was our all-time high down to the October lows, and this is the retrace. Now, in general, there's a couple ways to look at this. Sometimes you get something like a Bitcoin top, which is a double top, where the second high is a little bit higher than the first high. That's one type of cycle top. The second cycle top is where it's a lower high and you roll over, and I think that's what we're trying to figure out now. Where as of now, we have higher lows on the S&P and higher highs. Do we roll over and make a lower low and then start cascading to the downside? And one of the things to look at here is if we go to the NASDAQ chart, I love showing this, where if we zoom out, let me go to my weekly chart, and we look at the 2000 highs. So this is your .com bubble here.
Yeah.
And if we look at that, it was a very vertical move, much like we saw here in the recent history of this market. And then look at how it pulled back, had this huge bounce, convinced everyone we were going to go to new all-time highs here, and then it had the bigger correction. And to me, this looks very similar on the NASDAQ, and so I wouldn't be surprised if we're setting up for that bigger rollover that kind of matches the .com collapse. And if you look at some of the money, I mean, the amount of liquidity or money that's piled into the Magnificent Seven stocks, the Apples, the Googles, the Amazons, et cetera, NVIDIA, it is very reminiscent of kind of that over leveraging and euphoria that we saw back in 2000, just before a bigger collapse as well. So again, all we can do with charts is kind of extrapolate out and look for higher probability things, but this gets my attention. There's no doubt about it.
Indeed. As they say, history doesn't always repeat itself, but it does rhyme. And that's a wonderful example of that actually happening. Yeah. And maybe what we do is we just move on to silver. I'm very keen to get your thoughts on silver because we've had a few attempts. So you can see that wedge formation forming there, and we keep on expecting a breakout in this. It keeps on testing those lines and then pulling back and then testing the lines beneath. What's your gut feeling on this now, or what are the charts suggesting?
Yeah, so like you said, we have this big wedge pattern, and then within that wedge pattern, we have a smaller wedge pattern, and that's essentially what we've been doing. We've been consolidating in a tight range. I am in the camp that, you have to angle, well, if the economy slows down, does the industrial demand for silver, weaken a little bit? But at the same time, I'm looking at gold, and gold's telling me it's going higher. And in all fairness, the silver chart is telling me the same thing. So the charts are always paramount. Doesn't matter about what I think about the economy. And right now, the chart, I would say, has a favorable situation to breaking above this level here around 25.60, 25.50, and eventually retesting $30. So the question then becomes, if it breaks $30, do we get one of those parabolic runs that we all remember when we were back here, right? I mean, so you had this one back here in 2011, which was just a remarkable move. And you even had one back here as well on silver. And interestingly enough, it actually was basically a double top on silver if we extend that out, right? So just kind of interesting to look at history on silver and look at how price kind of had these crazy moves. And the question is, are we setting up for another one of those type of moves in this situation?
Hopefully it's more of a longer sustained move than those type of parabolic moves, because as you can see from those charts, whenever we see those parabolic moves higher, we tend to see some very strong corrections after the fact.
And I would just say the likelihood is it will be a more sustained rally, mainly because during this pullback after the last pop to almost $50 or about $50 on silver, we know that inflation was, dead for essentially a decade, if not more. And so if I'm right and inflation starts to be a little stickier at 3%, 3.5%, 4%, then it does indicate that we could likely see a hold of those gains versus where we had such a dramatic pullback as inflation essentially died out.
Gotcha. Tell me, what's really catching your eye at the moment, chart wise? Anything that you got? What's your major sell or major buy at the moment?
Yeah, so I mean, for me, being a gold fan right now, I love the fact that GDX, the gold miners, are down. They've been beaten down. If you look at where gold miners were back in '09 or even here. I mean, we really haven't gone anywhere since 2013. In fact, back here in 2013, price is almost identical to where it is now. And I think that a lot of that has to do with price. Number one, gold hasn't kept up with inflation recently, right? So we've seen inflation in labor, in their tools that they're using, in their equipment that they're using, but gold hasn't gone up enough to compensate. So my guess is once gold takes off, you'll see this big rebound in the gold miners, and you'll probably see a move back up towards that $65 high that we saw in 2011. So again, gold miners are definitely one to be watching. I love the Newmont mining chart, for instance, right now. If we look at the daily Newmont mining, look at this like wedge kind of consolidation and how it's just hovering in this lower end of support. And again, these type of charts where, really no one's paying attention to it, that's when I start paying attention, because it means there's a ton of investors that eventually, when it starts to move, they will pile in most likely and take me for a ride to the upside. So again, those are kind of the trades that I'm looking at right now. There's a couple others as well. I mean, WBA is a stock. I know it's not really in the realm, but of what you guys do. But what I love about it is everyone's hating on it. It pays an 8% dividend. It's been bashed down here. It's being removed from like the S&P 100 or something. Wow. So it's getting this forced selling from these funds that have to align themselves with the index, and it gives us an opportunity here. So it's bouncing today a little bit, but again, it's a profitable company trading at a 7 PE, forward PE. I would much prefer to be in something like this going into a recession versus a high-flying tech stock that's trading at a 40 PE or something like that.
Okay, and for all of our viewers who also have an interest in crypto, what's happening with Bitcoin at the moment?
Yeah, so Bitcoin was honestly looking pretty nasty the last couple of weeks, even the last couple of months. What we saw on Bitcoin is that a bunch of these big news stories, like the Ripple, right here is where the judge in the Ripple case essentially ruled for Ripple. We had a one-day pop and then it reversed. Anytime you see a reversal candle after good news, that's always a bearish indicator. It tells you people just dumped right into it, and we saw price go down. And then we had the Grayscale news, where the judge ruled for Grayscale. It popped 2 days later. It was right back down. Now, what I like is that yesterday we had this dump on Bitcoin, tagged the low from the BlackRock news right here. This was the BlackRock spot ETF news that sent it up. And today we've reversed that. And so you're almost seeing the inverse of what was here and here. And so short term, I'm actually leaning more towards the bullish side, even though I think over the midterm, we likely will still head lower. So good price action on Bitcoin today, no doubt.
Gareth, once again, fantastic insights. Really appreciate you coming on the channel. We're going to see you back on here again shortly. So it's verifiedinvesting.com. That's where people find out about you, yes?
Yeah, verifiedinvesting.com. And I still have inthemoneystocks.com as well. But again, my goal is just to get education out there. I mean, I do have trade signals and so forth. But again, learning how to read the charts changes everything you do as an investor, whether you're a commodities investor, a Forex investor, stocks, or crypto. And so it's really powerful. It's tools that are available to everyone. And I do encourage everyone to get educated.
Superb. And for everybody that doesn't want to miss next time that Gareth's on talking about the charts on gold and silver, subscribe to our channel here, hit the notification bell so you get notified, and we'll see you next time, Gareth.